This meeting is being recorded.
Good evening, good afternoon, good morning, whenever you are. This is another part of the Become cTrader Master Series webinar. And today we are going to talk about the indices that you can trade with TopFX. As you remember, in the two previous webinars, we talk about the ETFs, we talk about the Forex market, we talk about the precious metals that you can trade with TopFX. Today, world index indices, the index of the US, the index of the in Europe for the Eurozone, DAX and FTSE and the Spanish indices. We are going to talk about this, how you can use them, how you can trade it, what are the trading conditions on the indices, why this kind of a situation like index is going up, US dollar is going down is happening, what are the inner correlations, what are the correlations between various assets on the financial markets. All of this will be covered today's webinar to make you more familiar with the situation on the indices in the TopFX. So as you can see, I'm on the TopFX website, topfx.com.scu. If you want to take a look, what are the trading conditions for the indices, what you have to do is go to trading and then you go to markets, and in the markets menu you have indices. If you click here, you can see straight on that you can add the global indices to your portfolio and trade with some tighter spreads in the market. Tight spread, reliable execution, leverage up to 1 to 200, segregated client funds and negative balance protection, micro lot trading available, and daily market analysis and inform in platform signals are available on the TopFX cTrader. So as you know, we talk about the CFD trading. Please notice the situation that we are not trading the indices the per se, we are trading the indices CFD. So what are those at the beginning of our journey with trading on TopFX? So stock indices that track the performance of the group of stocks and are highly responsive to economic events. If the German stock index, which is called DAX or German 30, it depends, but that's just a different name for the same thing. This index represents the value of the 30 largest companies listed in the Frankfurt Stock Exchange in Germany. So when you trade index CFDs, you can capitalize on the price movements without actual ownership of the underlying assets, which is exactly what I said. You are not owning the index per se. You are just trading the price movements. Yeah. For instance, if you assume that the price of a stock index would rise for some reason, you would place a buy order. But if you believed it would drop, you would place a sell order. Of course, if the market moved towards the direction of your order, you would make a profit. Otherwise, you would make a loss. So you can control your portfolio and your market exposure with micro trading. You can gain interest from dividend payments on buy positions. That's very interesting. And of course, you can choose the preferred pricing model without dealing desk executions. And if you want to take a look at the spreads and trading specifications of the indices, you need to choose your platform. We are going to choose the cTrader because this is the platform we are going to use, and you can find out what is the index you want to trade. For example, if you want to trade on Australia, the description is Australia 200 in the TopFX. The leverage is maximum leverage is 200, so 1 to 200, and minimum lot size is 1 lot, and minimum spread in pips is 4.5 pips. As you can see, Spain has the description Spain 35, so there's the value of 35 of the most valuable stocks in Spain. Leverage is the same, 200, minimum lot size 1, minimum spread in pips is 4.5 pips. France 40, the same situation, but the spread is 1.5. Germany 40, the same situation, but the spread is 1 pip. Hong Kong 50, the spread here is 9.5 pips. The Netherlands, the same situation, leverage is 1 to 200, and the minimum lot size is 20. Minimum spread is 0.7 pips. The Italy 40, spread is 7.5 pips, and the Japan 225, which is called Nikkei, leverage is 1 to 200, minimum lot size is 1, and the spread is 8.5. Europe 50, spread is 2.1. Switzerland 20, spread is 3 pips. UK 100, so-called FTSE, spread is 1.5 pips. US 30, called Dow Jones, spread is 1.4 pips. US 500, which is, of course, S&P 500, is the spread is 0.9 pips, and the US Tech 100, which is Nasdaq, American Nasdaq, the spread here is very, very tight, 0.9 pips. So those are the trading conditions and the brief specification of the indices that you can trade in TopFX. You can, of course, choose your platform. You can use the cTrader desktop and the web version, or you can choose to trade using your mobile or tablet, of course, if you want to do this on the go. So pretty that easy situation here. I think that everything is clear. There's no need to explain anything else. Of course, you need to remember that some of these indices have the name, like the FTSE, like Nikkei 50, like Euro stocks, Dow Jones, S&P 500, and Nasdaq. So the description might be a little bit different than in the real market. Name known, for example, from the financial media. Now let's take a look at the cTrader. Let's take a look here at the cTrader. Where can you find indices? Of course, what you have to do is to go to the trade panel. So let's say you start with this, the standard layout for the cTrader. If you want to see and trade, of course, the indices, what you have to do is go here on trade. Then what you have to do is go on indices, the second menu from the top, and as you can see, plenty of indices is available here for you to trade. For example, we are going to take a look at the US 500, S&P 500, one of the most popular index in the world. As you can see, the first thing you're supposed to do is the symbol info. So as you can see, base asset is US 500, quote asset is US dollar, minimum change is 0.01 pip. Pip position is right now, now is 0. Lot size, the minimum lot size is 1 contract. The commission is right now per million of the US volume is 0 USD. On my account, minimum trade volume 0.01 contract. So this is exactly the same what this is, minimum change, and the maximum trade volume is 100 contracts. Swap long position in pips is minus 0.51, and the swap short position is minus 0.1 one. So that's the symbol info. What else you need to know straight on when you want to trade the S&P 500 is the hours this market is open. Basically, this market is open from Monday from midnight Monday to 11 o'clock. So as you can see, you can basically trade it almost 24 hours, 5 days a week. Okay, so it closes, it opens with 1 hour basically break. There is no problem with trading. This index is well known, one of the most one of the biggest most capitalized index in the world, US 500. Which one is belongs to the same group as US 500 is of course US 30, which is Dow Jones, and the situation here is exactly the same. I'm talking about the market hours. Max, you even have the information about the leverage 1 to 200, as I said before. And the third one is US Tech 100, which is of course Nasdaq. So you can trade the whole Nasdaq index if you like. So those three indices are of course the indices that are most likely being traded during the in US session, US trading session. What are the most uh, traded indices during the European session? So the London session, for example. Of course, the UK index. UK index is UK 100. It's called FTSE, of course. As you can see in that situation here, this UK 100 index is most likely the greatest volatility, the greatest liquidity, the greatest amount of trades on the UK 100 are being made during the Europe session, together with the Europe 50, Italy 40, Switzerland 20, Netherlands 25, Spain 35, France 40, and Germany 40. Those indices here, basically this bottom range of the indices, are the ones that are being traded most likely during the European session and the crossover with the US session. So there's a couple of hours when the trading is really dynamic, let's say. Okay, Australia 200 is, and the Nikkei, where is the Nikkei? Let me just yes, there you go. Japan 225 and Australia are being traded during the Asian session, and of course then first Japan starts, then Australia starts, then the Hong Kong 50, the Chinese index it starts as well. So if you want to trade that Hong Kong 50, of course, you can trade it without any problem. Nevertheless, please take a look at the market hours, because those are different than the market hours for the US and the market hours for the Euro zone. So this is the situation on the Chinese market. What is the correlation? I mean, what is the correlation between the indices and the and, for example, the US dollar? Well, generally the correlation is negative. What it means is very simple. I will focus on the US 500, so S&P 500 index. Okay, so what we say here in financial markets is generally the correlation between the US dollar and the S&P 500, and the correlation is negative because most likely and most often the US 500, which is S&P 500, and the US dollar are being traded in the opposite way. So if the US 500 is going up, for example, let's say this is 1 hour chart. Okay, this is 1 hour chart, US 500. There you go. If we see the US 500 is trading up, we can say that the risk on mode for the financial market is now in progress, which means that traders are buying the stocks, okay, buying various stocks, which is why their value is rising, which is why this index is going up, okay. And if they are buying stocks, what they are leaving, they are leaving the value of they are leaving the currency, of course, right? So they're buying the stocks, they getting rid of the currency. Most likely this is the US dollar. So that's the one reason why the stock markets is going up, and then the US dollar most likely will go down or stay at the very same level. You can take a look at the US dollar index on the cash indices here menu. Right, this menu is at the very bottom. You can see the cash indices. Here is the US dollar index. This is generally the basket of the US dollar against the other currencies. Okay, so this is why the situation here, it might be not 100% the same with the correlation of, for example, S&P 500 straight on. Nevertheless, that's the general rule. If we have the risk on, investors are buying stocks to risk money to get a more premium for what I mean is, of course, the profit, and they getting rid of the US dollar because the US dollar is that's the one thing, and the US dollar is the let's say the safe haven currency. Okay, so the investors all over the world, they have this idea in the mind that they don't need a safe haven. They want to risk their money, which is why they're buying stocks, and they are, they are paying for the stocks using the US dollar, which is why most likely US dollar value and US dollar price and the US dollar is going down. The same situation, the same correlation here is with the S&P 500 and the most traded forex pair, which is the which is the euro dollar, of course. If the US dollar index US index S&P 500 is going up, the euro dollar most likely will go up, because this is the situation when the risk is on. The euro is the newest currency, right? In the Western world, which is why there is not that much trust in this currency as it is compared to the US dollar, of course. So if you are buying euro, they might say that you are risking some money. If you're buying stock, you are risking some money. But of course, you expect what? You expect the premium. You expect the bigger profits. You can stay with the US dollar, but the value of the US dollar will likely not change in the relation of the if there is of course the no demand for the safe haven, so it will stay relatively on the same level. So if you take a look, let me say, on the popular markets, and if I take a look at the euro to the dollar, as you can see, the euro dollar will likely go up as well. It's especially noticeable on the higher time frames, like a daily. This is, for example, the euro dollar index, and if we take a look again on the popular market, which is the US 500, you can see that US dollar was going up very, very dramatically, and the US 500 was going up, but not that much, right? So it's not one-to-one the mirror the reflection every time. It's just a kind of a correlation, kind of a relationship between the cash and the indices, the most capitalized and the biggest indices in the world. Okay, so that's the situation here, and that's the relationship between the currencies and the indices in the forex market. What is the situation with the gold and the indices? Is there any relationship? Of course there is. If you take a look at the US 500, which is S&P 500, as you can see, the lows here were made. Let me just take my cross hair. This is the basically that's daily time frame charts, which is why that's the end of the 2022. So we've been moving up in the end of the 2022. If we take a look at the gold, let me just see. There you go. This is silver and the gold. And the gold, I'm trying to find out the gold. Brent dollar, and so let me just, there you go, on the very top. So the gold, of course, as you can see here, what gold on the daily time frame chart was going up as well. So the current situation here is that if S&P 500 is going up, the biggest index in the world, then most likely since the lows of the 2022, that's exactly the same level, gold is going up, euro dollar is going up. So it means that what happens with the US dollar is that the US dollar is being dumped all over the board. So that's the relationship, that correlation here between indices, between gold and between Forex market, and the biggest Forex pair on the Forex market, euro dollar, is now very, very clear. The biggest loser in that situation is the American dollar. Gold is going up. S&P 500 is going up. Maybe not that with not that big dynamics, but it's still going up. Euro dollar keeps going up. Well, the same situation. The end of the 2022 keeps going up. And what's going on with the US dollar index? Let's take a look. What is going on with the US dollar index? It should go lower. So US dollar index during the same period of time goes, this is the top, goes down. So please be aware of this kind of internal market correlations. They might give you a kind of edge when you are trading the financial markets. Okay, so let's go back to our indices. What else do we have here? Of course, S&P 500, Dow Jones, Nasdaq. We all know all about this these indices. And if you, for example, want to trade some shares, like for example right now one of the most traded shares in the Nasdaq 100 is, for example, is of course Tesla. We talk about this situation here with the shares. We got the US shares market. Of course, they are now open. All you have to do, if you see the US indices is going up, is to concentrate on the biggest, most capitalized shares or companies that issue the shares in the specific country. So in that situation, I'm trying to find the Tesla. That situation, Tesla is one of the biggest companies in the world. As you can see, what is going on here on the daily time frame chart. Maybe we'll go a little bit lower, like 1 hour. As you can see, Tesla is trying to rebound a little bit. And if you feel like a Tesla being a big part of the index, you can of course do what you need to do with the particular share that are very, very critical to the index, for example, right? So we are talking right now as an example, of course, for the educational purposes only. We've been talking about the Nasdaq 100. Very popular market among the European traders, mostly because the most activity and the most volatility during the on this index is being made during the European session is of course the German DAX. This time this is being labeled as the Germany 40. So as you can see, the situation here on the DAX, for example, is exactly the same as the situation on the any other index. The other one, very popular one, is the Japanese Nikkei index, Japan 225. And in that situation, very, very often this index is being traded during the late European session, and of course during the Asian session, and the beginning of the European session. Let's take a look at the S&P 500 now, and let's place some orders to see how this market basically works. So what do we have here is of course the quick trade panel. I want to, let's say, I want to trade one contract. Let's do one contract. I want to trade one contract. So of course, if I hover around here, I will get all of the details regarding the pip value in that situation, one contract will be $1. Trade value is 3,988, and for buy and for sell 309,087. The commission required is $0, but the margin to buy is required to buy is 19.94, and for sell is 19.95. I'm eligible for this trade, so I can easily buy one contract, and then of course, according to my research, according to my analysis, I can do something with this market. Let's say I want to buy for the certain price. As you can see, order is filled, and now I am long on S&P 500 or US 500, one lot, entry price 3,987, take profit 4,007. As you remember, my take profit is automatically set up as on the 20 points in that situation, stop loss 20 points below, and as you can see right now my trade is 20 cents underwater. So nothing special here. As you can see, all of this trades are being very nicely placed. There's no problem for me to immediately receive the trade on the market, and right now I have this number one next to the US 500, which means I have one position open on the US 500. I can trade the Dow Jones as well. As you can see, this situation, the Dow Jones, let's say I will trade again, let's say I will trade again one contract and I will buy it. So not a problem to trade on the Dow Jones 30, one open position here. And if we are trading everything, so for the educational purposes only, let me just open one contract. Oh, sorry, one contract, no one mini contract, but one contract on the Nasdaq. So this is one contract. Let it go. Quick trade panel was done, and as you can see, we are now have one position on every market open. On this one we have two positions, of course. So okay, let's leave it, so you know that one is one micro lot and the other one is one full contract. So the situation here looks very easy. The trading conditions are very easy. There is no problem to open a contract. There is no problem to with the liquidity of these markets. Any indices you want to trade from all over the world are here available at the bottom of your finger, just to pull the trigger and of course to trade without any problems. So in that situation, I would like to leave you with the webinar about the indices. I think we went through all of the major indices, about all of the correlations, inner correlations with the inside the index and with the index and the other financial assets. So I think there is no problem here whatsoever. This is the beginner's guide, so please make sure that there are of course the other ways to trade this indices. You can use technical analysis, you can use fundamental analysis, you can use both, mix of both of them. The most important thing is that you will be of course well informed and educated about the possibilities that in trading the CFDs on the indices gives you here in the TopFX. So that's the situation I wanted guys to tell you. Thank you very much for watching this webinar. I hope you like it, and I would like to take this opportunity to invite you for another webinar which will take place of course next week, the same time, the same hour. I hope I will see you guys soon. For now, take care and bye bye.